Hi, everybody. This is Thomas Trimmingham from M&R Companies, and this is another episode of We Are M&R. And today we've got a great conversation between Danny Sweem, CEO of M&R Companies, and Gerson Guzman, who is Chief Compliance Officer and Board of Directors on Corinthian Capital. And Danny and Gerson are going to talk about different ways companies can take advantage of some SBA loan programs that have recently been available through this crisis.
Thank you, Tom. My name is Danny Sweem, and I'm the CEO of the M&R Companies in Roselle, Illinois. And as Tom had indicated, we're bringing you a series of YouTube videos in our series We Are M&R that we believe are contributing or can contribute to providing advice and guidance to our customers and other affiliates within the industry as we navigate the COVID-19 crisis. Today is April the 10th. It's a Friday. It's Good Friday. And we are in the midst of this nasty COVID-19 epidemic that's now ruled a pandemic throughout the world here. So we brought a number of videos in the last few weeks from a variety of customers, from a variety of professionals, whether it be medical or legal, minds relating to, the impact that the COVID-19 is having on our society. Today, I'm pleased to introduce to you Gerson Guzman. Gerson is a partner at Corinthian Capital. Corinthian happens to be the primary owner, an equity firm that is engaged and owns the M&R Companies. And I have the good pleasure of working with Gerson on a regular and frequent basis. He's a member of the board of directors. He's also the chief compliance officer at Corinthian Capital. Gerson's been very helpful in guiding us as a company at M&R and all the other companies within the Corinthian portfolio, for that matter, in understanding and interpreting a lot of the changes with regard to laws and opportunities to secure loans and in means of navigating and financially funding ourselves and other companies through the crisis itself. So we thought, with Gerson's knowledge and his willingness to participate and help our customers wherever possible, that it would make a lot of sense that if we brought him onto the video today and asked a number of questions relating to maybe things that would be important for our customers relating to the loans also. So, with that, I'm going to run through a series of questions. This will also be a lead-in to what we hope will lead to a WebEx, a webinar, in which we can have customers participate that would take place in all likelihood sometime before the end of April. So, with that, Gerson, thank you for joining us on the video today.
Thank you for having me, Danny.
So, Gerson, just real quickly, why don't we start off with some of the simple, basic, things related to, some of the measures that the U.S. government has taken. They've created a number of opportunities for loans. What are some of those loans? Could you describe, some of the federal laws that have been put in place that we hear about in the news and really how they work in general?
Great. Well, thanks for giving me this opportunity, Danny. And I think it's important that we do whatever we can for the broader M&R community. I've had the pleasure of meeting a lot of your customers and dealers at various shows, so hopefully this is a resource to everyone. And I will qualify this by saying, please consult with your tax advisor, your financial advisor, accountants, and lawyers ultimately before submitting any of these applications. We're trying to be helpful here, but obviously we can't provide specific guidance to anyone participating on this cast. In terms of the various programs, to answer your question directly, as everyone has likely heard in the news, the federal government passed a fairly sizable stimulus package, the CARES Act, and that has been billed at about $2 trillion. And within that program, there were directed support for some industries, but more broadly, I think, and of most interest to everyone has been the expansion of a couple of the SBA programs. There is an emergency support program, and then there's also what's known as the Paycheck Protection Program, the Triple P, and that has been the one that has been mostly in the news. geared towards supporting companies to retaining employees. That program, as I understand it, was funded with an additional $349 billion to support the retention of employees, and that it will be in the form of a very low interest loan that has features that would allow it to turn into a grant if the company is able to retain its payroll or workforce through the summer. And there is now talk of having that program being further funded by an additional $250 billion, and that is currently being negotiated.
Got it. That's a lot of money, obviously, at stake there, and it could come as a great relief and resource as we go through all the financial implications associated with this pandemic. So the monies that are allowed are, fall into various buckets, and they're fairly significant. Again, what were the dollar amounts that a individual company might be able to borrow? I'm sure it's segmented in various classes, but can you speak to that for a moment?
Yeah, absolutely. So specific to the Paycheck Protection Program, there are provisions that allow for basically 2.5 times your trailing 12-month average payroll costs. Now, there are some exclusion for any employees with compensation above $100,000 with a maximum loan amount of up to $10 million. So it's the lesser of the 2.5 times your trailing 12-month payroll costs, or up to $10 million. So you have to do the calculation.
Got it. And it's all basically tied to, these are grants tied to keeping employees in place for the most part, correct?
Correct. That is the full intent. And as we've all seen in the news, unemployment has skyrocketed, with unemployment claims now at 6.6 million per week, and that assumes individuals have actually been able to apply. A lot of states have had challenges processing those applications. So the government's interest is in making sure that we can all get back to work once this pandemic recedes.
Got it. And as far as M&R goes, we've been very candid, as many companies have, as we've had to furlough a number of employees. So would this exclude us in any particular way, since we've furloughed employees, which is in essence, they still are part of the M&R team, but they're not able to work for the moment for a paycheck? Would that exclude us in any particular way, or other companies similar to M&R?
No. The way the program works, again, it's a measure of your historical payroll, and ultimately the features that it has for employment retention is not tied back to individual employees as well, because they recognize that either the company or the employees may have other opportunities or pursue other paths. So ultimately, at the end of the day, they're looking to make sure your entire payroll level is returning back to those pre-pandemic levels.
Okay. And how would a company demonstrate that they, is just obviously filling out applications and the likes, but how do you demonstrate, that you've been impacted this way, and maybe how many people that you've had to, furlough, for that matter, and that you've also exhausted other forms of trying to, secure credit in other ways? Is it subordinate? So you've got to go through various loopholes and steps before you're eligible for this, or can you go straight for these loans right away?
So the good news is you do not need to evidence for the payroll protection program that you've exhausted every other possible source of liquidity. This is a designated program to support the retention of employees. So even if you do have access to other capital, whether it's a business line, your savings as an entrepreneur, et cetera, you do not need to evidence that you're otherwise using that money. You are still eligible to apply and be considered for this monetary loan.
What sort of restrictions are there with regard to how you would spend the money, how you would use those funds if you were able to secure the loans?
That's a great question. So you are able to use the money for payroll costs. And again, that would exclude compensation for highly compensated employees of 100,000 or more, group health care benefits, insurance premiums, mortgage and rent payments, utilities. You can pay interest with the monies, but you are not allowed to pay off principal on debt that existed. So there is some flexibility that you can use the loans for some of those operating costs that I mentioned. But, as with any program with the government, it's going to be very important that you keep track of the use of funds. In the event any questions are asked, you should be prudent in ensuring you have proper documentation on how the funds were utilized to ensure that you've been compliant with the intent of the program.
Got it. Who would you contact if you're, so obviously you've got needs, you need to apply somewhere. Where is it that you would suggest that our customers or partners, apply for these sort of grants or loans?
So the guidance we have been provided as part of our support to our portfolio companies is that each business should begin with their existing bank relationships. A lot of banks, for many reasons, have prioritized or limited who can access the application process with their particular institution. But you should begin with the bank that you have a depository relationship with. They may have limitations and require that you have an existing loan with them. In part, as I understand it, this has been done to ensure and facilitate compliance with Know Your Customer laws as well as Patriot Act laws. Otherwise, the process would just take a lot longer for them to verify that you are who you claim you are. The business has been in place and is, a legitimate going concern. So the banks themselves have prioritize their existing relationships and have parameters as to who they are accepting applications from. The SBA also has a list on their website of the top 100 SBA lenders in the country, the major banks and smaller banks, as a resource. So start with your existing banking relationships, and if they are not otherwise an accredited SBA lender, they should be able to help you and point you in the right direction of who you would be able to apply through.
Got it. No, thanks for that. What is we are hearing on the news on a regular basis, though. This is a massive program, obviously. Lots of people are getting in line for this. And then there's also been a number of glitches and problems associated with that. Can you speak to some of those and the confidence level you have that these problems will soon be overcome and things will improve as far as the service side of that?
Absolutely. Well, I guess it goes in line with the fact that I do view myself as an optimist at the end of the day. So I think ultimately these technology glitches will be solved. But I think we all have to recognize this is a massive stimulus program that is being channeled through banks. And they've had to move very quickly in order to process these loans and get ready. So while the press always loves the headline on glitches, you're talking about trying to deploy nearly $350 billion in loans of maximum size of $10 million. And so that's a lot of work, a lot of processing need. Banks are staffing up. My advice to people is get your documentation together, fill out the application, and get it in there so it's in the queue. Inevitably, this is not going to be a bottomless availability. There are limits as to how much capital is being provided. There is talk, as I mentioned, of increasing the amount of available money for these loans, but it is not without limits. So you should move quickly to submit your application.
Okay. And are there other options outside of these programs that are being made available or that you expect will be made available in the coming days and weeks as well?
Yeah, so there has been an expansion of their emergency EIDL loans. I can't remember what the acronym stands for. Those are bigger dollar loans that have limitations under the SBA's emergency provisions. So typically these are loans that are provided by the government in impacted areas, let's say FEMA, in a situation where there was a hurricane or an earthquake. That loan program has been expanded. It is my understanding that those programs come with other limitations, including personal guarantees or collateral required. So as a result, those have not been appropriate for our portfolio companies. And again, we would be looking at those on a case-by-case basis. In addition, under the CARES Act, there has been a number of tax credits and other benefits that individual companies should take a look at and see if they are applicable to their own situation, because those could improve some cash flow and reduce tax burden for some of these businesses working to get through the pandemic.
Got it. And how does this turn into a grant? I mean, we hear that these are obviously very favorable sort of programs and can be very favorable for those who are applying and securing these monies. How does it turn into convert to a grant?
So my understanding of that is that if you will need to be able to evidence that your payroll levels were at that pre-pandemic level by June. Now, my personal view on this is that is probably going to have to be assessed as these various state orders are lifted. But the rules as they stand right now is you need to be back to that pre-pandemic level by June. Now, if you're operating in a state or a county where you've been limited from returning back to normal, I don't know yet how they're going to deal with that. But that is the current guidance.
Got it. Thank you very much. Where could we learn more about this? I mean, obviously, I referenced the fact that we want to host a webinar where there's some Q&A, so that would certainly be a resource. But where are some other resources that we might be able to tap into if we wanted to learn more about these opportunities?
I would say that the first place to start is the SBA's website, sba.gov, or you could simply look up the Payroll Protection Program on Google or a browser, and it would take you to the relevant information. I know that the M&R team is working on putting together a resource center where you will all be posting some publicly available information, and that would also be a great place for your customers and vendors to begin to learn some more. And the application itself is fairly straightforward. It's a couple pages with some attestations. You will need to provide some backup documents and ultimately be prepared to provide additional documentation that your bank or the SBA may request, but the form itself is pretty straightforward.
Excellent. Thank you for that. One last question I failed to ask is that we have other businesses, or many companies have subsidiary companies or associated businesses that are affiliates of their own business. Is that limit you to one time for all the companies and affiliates that you're dealing with, or do you have to report on all of the businesses that you are own or associated with when you go and make these applications?
Yeah, that's a great question, Danny, and one that is relevant to investor groups like ours, but also a lot of entrepreneurs. They have investments in a number of different companies. So the rules under the SBA guidelines, there is something known as the affiliate or affiliation rule, where you're required to disclose and include as part of the aggregation of that group any business where you have common ownership, common control, or ownership of 20% or more. And then you basically have to aggregate the employee count. The Paycheck Protection Program has been designed for businesses with 500 or fewer employees. So you would need to disclose all of that and take all of that as, in effect, a combined business. Now, there are some ways to be able to also apply an exceptions to that 500 employee rule, specifically under the PPP program. As I understand it, there are exceptions for franchises. So if you are a franchise of a big chain, the franchise that you own does not necessarily get aggregated altogether. Restaurants and hotels are being measured on a per location basis. There is also a carve out to that affiliation rule if you have existing SBA or SBIC money. There's a specific exclusion for that. And to the extent you ultimately do have to aggregate everything, as I understand it, there's a further small company size test where you would need to be able to meet a tangible net worth and net income level test as well. And I believe we'll be posting an FAQ from the SBA on that test as well. So my view on this, as with any process, is apply. talk to your bank, and they can always ultimately say no or ask for additional information. But it's important for you to gather up all the documentation and see if you can qualify under the guidance provided by the SBA.
Excellent, Gerson. I really appreciate the help and the guidance here. We certainly look forward to hosting and having you as a huge part of our upcoming webinar. Speaking to this a bit more in detail and answering more direct questions from our customers and our viewers of the YouTube channel. But as we indicated all along, at M&R Companies, our ability to service you comes in a variety of different ways. We obviously, hold our employee base up as our strongest asset, but we obviously want to make sure that we're always taking care of our customers and providing as much worthwhile information and guidance to you as we possibly can. We're looking for also guidance and advice from you as to other types of content that you'd like for us to publish and make available to you guys in the marketplace. But I really want to thank again Gerson for your time today. And hopefully everyone finds this of some use, and we look forward to having everyone that would like to participate in the upcoming WebEx in the coming days. Thank you.
Well, thank you, Danny. I hope this was helpful.
It was. Thank you.